All right, welcome to section 3. So what is margin? We've talked about this before, but when trading Forex, you're only required to put up a small amount of capital to open and maintain a new position. That capital that you put to the side is known as the margin. For example, if you want to buy $100,000 worth of Euro USD, you don't need to put up the full amount. You don't need to put up $100,000. You only need to put up a portion, like $1,000. Margin can be thought of as a good faith deposit or collateral that's needed to open a position and keep it open. Margin is not a fee or a transaction cost. Margin is just locked up as a deposit until you close your trades. Once the trade is closed, the margin is freed or released back into your account and can now be usable again to open new trades. So now we're going to talk about what margin requirement is. Margin is expressed as a percentage of the full position size you wish to open. Depending on the currency pair and your broker, the amount of margin required to open a position varies. In the chart, you can see some examples on certain pairs of their margin requirement. So let's look at a typical Euro USD trade. To buy or sell $100,000 of Euro USD without leverage would require you to put up $100,000 in account funds, the full value of the position. But let's say your margin requirement was just 2%. You would only have to put up $2,000 as the required margin of your funds to be able to open and maintain that position of $100,000. You can see a couple other examples here. To open a position size of $10,000, if the margin requirement was just 2%, you just need $200 that's going to be set aside so that you can trade with that $10,000. Pretty crazy, right? So just so you know, before we dive into a couple examples of how to calculate required margin, I want you to know that a lot of this is already calculated in the MT4 platform. So it's not essential that you know how to calculate this, but it's important for you to understand how it's calculated so that you know how margin is used in the Forex market. So diving right in, the specific amount of required margin is calculated according to the base currency of the currency pair traded. So if the base currency or the first currency in your currency pair is different from your trading account's currency, the required margin is then converted to your account denomination. So for example, if you bought 100,000 units of Euro USD, right? As you can see here. So you bought one lot of Euro USD. You would need to convert that to USD because the first one listed is the Euro, not the USD in this pair. So you would have to take 100,000 units of euros or 100,000 euros and convert it to the United States dollar. So let's say that the exchange rate is 1.1. Then that would mean 100,000 euros is equal to 110,000 United States dollars. Now that you have it converted to your trading account's currency, you simply need to multiply that required margin or take 3% of the $110,000. So that would give you $3,300 as the required margin to open that trade of one lot of Euro USD. The only reason for having funds in your account is to make sure you have enough margin to use for trading. Brokers only look at, and they actually only care that you have enough margin to continue trading. If you're a little confused up till now, don't worry. We're going to talk about used margin next and some other concepts regarding margin that will hopefully help as well. So what does used margin mean? Well, in order to understand what used margin is, we first had to understand what required margin was. Remember, when you open a new trade, there's always a specific amount of required margin or a percentage of your trade size that is required to be set aside as a deposit, just like we just showed in that last example. If you open more than one trade or position at a time, each specific position will have its own required margin. If you add up all the required margin of all the positions that are open, the total amount is what's called the used margin. Used margin is all the margin or deposits that are locked up and can't be used to open new positions. You may notice if you're getting into too many trades at once, it simply won't let you get into any more new trades because you've used up all your margin. In fact, when you click the buy button or sell button, it'll make this noise and you'll wonder why you can't get into new trades. That's because you've used up all your margin. So while required margin refers to a specific trade, used margin refers to the amount of money you need to keep all of your trades open. Let's look at just a quick example. Let's say you've opened two positions, one long, or you bought, right? One long USD JPY and one long USD CHF position. Let's say you've deposited $1,000 in your account. So you have $1,000 as your account balance, right? Let's say for the long USD JPY, you want to open a 0.1 lot size or 10,000 unit position. And for the long USD CHF, you also want to open a 0.1 lot size or 10,000 unit position. Since USD is the base currency or the first one listed in both of these pairs, calculating the required margin will be easy since they are both positions of 10,000 units of USD or 10,000 United States dollars, right? So required margin for USD JPY is 4% of $10,000 or $400, and required margin for USD CHF is 3% of $10,000 or $300. The used margin is the total required margin of each pair, right? So the used margin is simply the $400 plus the $300 or $700 used margin. Does that make sense? If it didn't make sense, go ahead and go back through this example. But basically, what we learned in this lesson is used margin is the total amount of margin currently in use to maintain all open positions. But it can also be referred to as the sum of all required margin being used. So if you need to go back and watch this section again to better understand it, go ahead. But let's go ahead and move on in the next section and learn about the concept of equity and free margin.
Hey, thanks so much for watching. Make sure you join our free Discord channel to get access to all the cheat sheets and a bunch of other cool bonuses. The next video in the course is right here.